Welcome back, and joining us on the show now is Kunal Shah. He's head of commodities and currencies at Nirmal Bank. Kunal, hi, thank you so much for joining us. And it's a day when silver is hitting all-time highs in the Indian markets right now. So while the international markets continue to hold around that 11-year highs, it is the Indian prices which have seen this surge coming not too far away now from a lakh rupees a kg. When do you see that level now coming in?
And in the history of the financial market, for the first time, we have seen with the US interest rate at 5.5%, we are seeing all commodities and including silver now hitting an all-time high. So if you see what has been happening, silver is having a deficit of almost 12% from last 3 years. Second, the scrap sales are not coming the way they should have been coming in the market at this price. And there is no incremental growth in the supply from last 5 to 6 years. So it is in a very strong bull run. There is no doubt about it. And yes, very likely it may test 1 lakh rupees in a matter of few days or a week. So the outlook continues to remain bullish on silver. These are the levels, if you bought silver at 60,000 rupees or 70,000 rupees, then my advice would be for the traders or for the short-term investors, they can book profits. But the long-term outlook, I don't see, in spite of the fact that prices have risen so much, no major supply-side growth is going to come in a shorter term. Maybe 1.5 to 2 years down the line, with the prices remaining at these levels, we may see a lot of mines may restart and exploration may start. But at this point, it doesn't look that this bull run is going to be abated. And the likelihood of it going to 33 and a half dollars looks very likely.
Kunal, while a lakh of rupees is quite a given right now, I mean, as you said, it could happen in a matter of days and weeks now. But on the higher side, where do you see any kind of a resistance coming in for silver? I mean, as you mentioned, the fundamentals are all on the stronger side. So in the international markets, for the Indian markets now, if we are looking at further spikes within this year, because the industrial demand will come in, we will see rate cuts, even if a few, but at some point in time in this year, what is on the higher side of sense now?
Yes, Manisha, exactly. The market is basically priced in. So whoever has been the investing community across the globe, they have taken one thing that no matter interest rates are at a higher level or no matter what, but the monetary conditions going forward are going to be relaxed. That is the consensus across the world, because the Western central banks cannot afford to service their debt after a point with the higher interest rate and with the higher bond yield. So in spite of the fact that interest rate cuts have not taken place, you've seen a massive rally across all commodities, and all commodities is basically the rally behind. It is coming at a time when world wants inflation to goes down and China is opening up. China is coming up with more and more packages, more and more incentive to revive their real estate market. And at a time when commodity prices should have remained stable, at that time, relax monetary condition, expectation of relaxed monetary condition, and China again growing, expectation of China growing high. A lot of agencies are, coming up with a higher growth forecast for China. So these two things are coming at a point where world wanted commodity to remain stable. And unfortunately, I believe that the inflation is not going to come down in the developed part of the world. It is going to go up. And we will have to live with the higher inflation going forward. So rate cuts are imminent, just a matter of time. And the fundamental of commodities, silver, continues to remain positive.
Well, that's about the precious metal prices, Kunal. But when you look at the industrial metals, we've seen a stellar April. May is only built up on that. And we've seen higher highs in many of these industrial commodities. So whether it's about copper, aluminum, zinc, we've done quite well on the charts and in sense of month-on-month return as well. From here on, for the month of June, now, would you look at consolidation at these current levels, or are you looking at further higher highs?
For the further higher highs, we require some clarity on when the rate cuts are coming. So now another trigger for metals to move up will be the trigger for the rate cut. So maybe tomorrow we have a US GDP numbers and you see a drop in US GDP, or you see a key data from US indicating that the US economy is softening. I think metals will again start to rally. So the downside seems to be very limited at this point. Upside, already we have seen a humongous upside when it comes to some of the metals like copper or, for example, zinc 20% rally what we have seen in copper. So at this point, my recommendation is buy the dips whenever any data, anything which comes negative for base metals, and you see a dip in that time you enter. So copper around 870, 880, good levels to re-enter. Again, it can surprise you on the upside to 935, 940 on MCX. Again, around $10,800, $10,700 on LME. But the broader trend for the base metal seems buy at dips, considering the expectation of easy monetary policy from the US in spite of the higher inflation rate. And second, China really trying to grow up and trying to give momentum to its economy at a time when world want commodity price to remain soft.
All right, you're speaking about commodities, and as we speak, it is actually the commodity stocks which have seen a bit of a spike. Manisha, thanks for joining in, and Kunal for that conversation. The Nifty Metals Index should come up for you. That's moved to the high point of trade, and as a result of which we've seen the Nifty ameliorate some of the losses as well. When we started the show, the Nifty was closer to that 22,700 mark, and now it's closer to the 22,760 mark, and that's led entirely by the metal space. Of course, a big mover in that has to be Hindalco. Started off slow and steady as the street was believing that maybe there could be some supply after the big rally that we've seen ahead of the news of the Novelis IPO, but now the street seems to be waking up to the valuation potential out there, and as a result of which there's a big up move that we've seen on Hindalco itself. Take a short break, come back. On the other side, we have Business Lunch taking all the market action ahead for you.